Welcome to our weekly roundup of key business developments in Sri Lanka. I'm Nishani Pigera. Let's first take a look at the main stories for this week. Sri Lanka signs deal with bilateral partners. Another round of private bondholder talks underway. And congestion at the Colombo port forcing ships away. In our top story this week, on Wednesday, Sri Lanka signed a deal with its bilateral creditors, delaying repayment until 2028 and extending the facilities until 2043. This group, consisting of Paris and non-Paris club members and China, holds around $11 billion of Sri Lanka's debt. These significant developments were broadcast by President Ranil Wickremesinghe in an address to the nation later during the evening, where he also highlighted the importance of current developments and that current actions should be carried forward to ensure Sri Lanka never needs IMF support again. Sri Lanka is also holding another round of direct talks with the private bondholder group this week. The proposed macro-linked bonds, where a haircut of 28% is proposed, as well as rates being linked to the country's performance, will be considered. Sri Lanka's bondholder group accounts for around 34% of Sri Lanka's external debt. During discussions, a temporary trading restriction is to be imposed on dollar bonds, as matters are deemed being market sensitive. The World Bank has approved a $150 million loan for Sri Lanka to be used for improving the quality and utilization of primary healthcare services, improving services provided to local communities. The previous project by the World Bank has enhanced 550 medical healthcare institutions with essential equipment, medicines, health workers, and basic laboratory testing facilities. Sri Lanka's key island-wide inflation fell to 1.6% year-on-year in May from 2.7% in April. The inflation decrease was largely driven by a significant drop in food inflation to 0.5% from 3.3% a month earlier. First Capital Research expects inflation to increase slightly in the coming months due to higher food prices. Shipping lines are currently skipping the port of Colombo to avoid congestion at transshipment hubs. Due to this, shipping lines are forced to make port omissions, while Indian exports to the US are expected to see delays of up to 2 months. The situation has been caused by the monsoon season, which has slowed operations, and the trend is expected to continue in the coming 3 to 4 months. In our weekly tourism update, during the first 23 days of June, just over 84,000 tourists have arrived in the country. In the year, almost 981,000 tourists have arrived. Daily arrivals were 3,669 in the month, up from the 3,617 recorded in May. In the month, India was the primary source market, followed by the United Kingdom and China. The all-share price index at the Colombo Stock Exchange remained stable this week as investors took a wait-and-see approach for the ongoing debt restructuring negotiations with the bondholder group. Maharaja Foods Private Limited, a leading manufacturer and exporter of Lankan food spices, will open its IPO on the 4th of July, offering 20% of its stake, issuing 25 million shares at 5 rupees a share. Meanwhile, SoftLogic Life Insurance plc and Hatton National Bank plc were excluded from the S&P Dow Jones indices at the 2024 mid-year rebalance. LB Finance plc will be included. At the Treasury bill auction held on Wednesday, yields on all maturities rose for the fourth consecutive week, with the 91-day maturity rising by 68 basis points. Bids amounting to 261 billion rupees were received, of which 115 billion were accepted. The Sri Lankan rupee continued to depreciate against the dollar for the fourth consecutive week, with the central bank's indicative mid-spot rate ranging around 305 to 306 rupees. And with that, we wind up for this week. Do subscribe to our YouTube channel at the link below for regular updates on economic and business developments in Sri Lanka. Until we see you again next week, thank you for watching. Stay safe.